Would you like to know why Pepsi's stock price dropped by 10% in 2024? Then stay with me until the end of the video and we'll find out together. Hi everyone! In today's video, we'll be taking a closer look at PepsiCo's stock. We'll review the company's third quarter 2024 report and discuss the expectations for the fourth quarter. That report is set to be released on February 4th, and it might just bring a turning point in the stock's movement. The first Pepsi soda was created in 1898 by a pharmacist in North Carolina, inspired by Coca-Cola's recent success. The drink quickly gained popularity, and in 1902, the Pepsi-Cola Company was officially incorporated. Today, PepsiCo is a global leader in various snack and beverage categories and boasts more than 20 brands that each generate over $1 billion in sales, including Fritos, Gatorade, Mountain Dew, Quaker, Lay's, Cheetos, Bubbly, Aquafina, and Rockstar. The company is currently available with a starting dividend yield of 3.63%, which is significantly higher than the 5-year average. The forward price-to-earnings ratio is at 17.8, compared to the 5-year average of 24. This level of decline was necessary for the company to reach the sector average. The stock price remains near its 52-week low. The company pays $5.42 per share annually as a dividend, distributed in 4 installments on a quarterly basis. The next dividend payment is scheduled for April 1st, and anyone who becomes a shareholder by February 28th will be eligible to receive it. The company has been paying dividends consistently for 59 years and has increased them annually for the past 51 years. The most recent increase was 7.1%, which is well above my minimum expectation of 4%. The 5-year average increase has been 7%, while the 20-year average was 11%. The earnings payout ratio has been below 70% for years, which is reassuring, and there is even a slight downward trend. However, the free cash flow payout ratio doesn't look as favorable, but expectations for this year suggest that it will stabilize at an acceptable level. Both earnings and free cash flow per share show an upward trend, which is very important. The shares outstanding chart also looks promising. For years, the company has adhered to its share buyback program, which investors appreciate. Fewer shares on the market mean each share represents a larger ownership stake in the company. Additionally, the company has to pay dividends on fewer shares, which positively impacts free cash flow in the long term. This, in turn, supports the company's future growth. The return on equity and return on invested capital graphs also look good. The operating and free cash flow margin show a more modest picture. The level of debt also seems fine. These graphs indicate a completely healthy situation. In summary, it looks like the company is available at a very low price, along with a very safe and rapidly growing 3.63% starting dividend. The credit rating is A+, which is considered very good. New tariffs and trade agreements. The Trump administration has previously imposed tariffs on certain imported goods, and the introduction of additional tariffs or renegotiation of existing trade agreements is expected. This could increase PepsiCo's raw material procurement costs and impact its international supply chains. Environmental regulations changes. The Trump administration aims to ease environmental regulations, which could reduce operational costs for companies in the short term. Corporate tax rate changes. The government may plan to lower corporate tax rates, which could increase PepsiCo's profits. Government structure overhaul. Project 2025 is a comprehensive plan to reorganize the federal government, aiming to strengthen the executive branch and promote conservative political goals. This plan could bring significant changes to regulations affecting companies and the market environment. It is important to note that these measures are still in the planning phase, and their implementation method, as well as their actual impact on PepsiCo, depends on various factors. The company must continuously monitor political developments and proactively adapt to the changing regulatory environment. For more on this topic, It's worth checking out the latest interview with Ramon Laguarta, CEO of PepsiCo, where he discusses his expectations regarding the Trump administration. The video link will be in the comments section. Financial results: net revenue, a 0.6% decrease year over year with a 2% foreign exchange impact. EPS, earnings per share, $2.30 according to GAAP, representing a 5% decrease. Organic revenue growth, a 1.3% increase on a non-GAAP basis. Base EPS, $2.31, a 5% increase on a constant currency basis. Key events: demand declined in North American markets. Quaker Foods North America division experienced a 13% revenue drop due to product recalls. Geopolitical tensions and rising costs impacted international markets. Regional performance: Frito-Lay North America, slight revenue decline. Quaker Foods North America, significant decline due to product recalls. PepsiCo Beverages North America, stable revenue with a 1% increase in the organic segment. Europe, 7% revenue growth. Latin America, made a 5% according to GAAP, but 3% growth on an organic basis. 2024 forecast: organic revenue growth is expected to be low single digits, previously estimated around 4% growth. At least 8% growth is expected in base EPS. A $8.2 billion cash return to shareholders, dividends and share repurchases is planned. Other notes: inflation, foreign exchange impacts, and rising costs have put significant pressure on the company's performance. Management has focused on strict cost control and efficiency improvements to adapt to the challenging market environment. Disclaimer: this video does not constitute investment advice. Do not make decisions based solely on the content of this video. Always do your own research to determine whether a company aligns with your investment strategy and portfolio. Thank you for watching today's PepsiCo stock analysis and our outlook for 2025. If you found this video insightful, don't forget to hit that like button and subscribe to Financial Freedom for more in-depth financial content. We'd love to hear your thoughts on PepsiCo's future in the comments below. Let's continue building this community of savvy investors together. Stay informed, stay empowered, and we'll see you in the next video.